Ladies and gentlemen, good day and welcome to the 1QFY26 and H1FY26 earnings conference call of Epackprefabtechnologies Limited, hosted by Motilal Oswal. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yash Darak from Motilal Oswal. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a very warm welcome to EPack Prefab Technology Limited's 1QFY26 and H1FY26 post-results earnings call hosted by Motilal Oswal. EPack Prefab was listed on 1st of October 2025. In H1FY26, the company reported a revenue growth of 36% and an EBITDA growth of 46% year-on-year. Additionally, its prefab business delivered a robust 46% CAGR over FY22 to FY25 while sustaining healthy ROE and ROCE levels. On the call today, we have management team being represented by Mr. Sanjay Singhania, MD and CEO, Mr. Nikhil Bodra, Executive Director, and Mr. Rahul Agarwal, CFO. We will begin the call with key thoughts from the management team. Thereafter, we will open the floor for Q&A session. I would now like to request the management to share their perspective on the performance of the company. Thank you, and over to you, sir.
Yeah, good evening, and welcome to the first investor call of EPack Prefab Technologies Limited after our listing on 1st of October. So we are very happy to present our first half of the year figures, and it is a matter of great pride for us that we have been able to live up to the expectations and the commitments made by us to the market and to the investors during the roadshows. So as said, by Yash, that we have had a strong revenue growth and EBITDA and PAT growth as well. So this is a testimony to the various steps that we have taken in the recent past, and also the philosophy of the company to invest in great infrastructure, to invest in team, and digitalization of our processes. So all this coupled with the strong order book which we had. So in EPack Prefab, as on 1st of April 25, we had an order book of 916 crores, and for us, the order book to revenue ratio is around 1.5. So typically, the order book for us is around 7 to 8 months, and because of the strong order book, we worked on increasing the monthly revenue run rate, and all the three plants which we have for the prefab, they started delivering a capacity utilization of close to 88 to 90% from the month of June onwards. So because of all this, capacity, first of all, capacity utilization, secondly, order book, and thirdly, the focus of the management on the streamlining the processes and the execution at the project level led to this stupendous growth for us. As we speak, the company has an order book of around 920 crores. So in our business, the order book gives a clear visibility of the revenue for the next 7 to 8 months. So this strong order book now is mainly coming in from some of the marquee customers. So in the last 6 months, we have booked orders of around 650 crores coming from various sectors. The main sectors has been the solar, the renewable sector, the semiconductor, FMCG, warehousing, and auto. So all these sectors have contributed to around 650 crores of order booking in this first half of the year. And typically in our business, when it comes to order booking, then the quarter 3 and quarter 4 are the heavy quarters. And similarly, when it comes to revenue, then for us, the first half is around 45% of the annual revenue, and the second half contributes around 55%. The reason being that in the quarter 3 and quarter 4, the weather conditions are much better, so the delivery and the execution at the site can be done easier. And this robust performance which has come, like it has been backed by, first of all, order book, then the utilization of the capacities. And thirdly, I'm very happy to state that we inaugurated our insulated sandwich panel line in our Andhra Pradesh plant in the month of June. So with that plant also now we have started to get orders and also utilize that capacity. So that has also added to the revenue. And going forward with the IPO proceeds, money which we have got around 160 crores for the capex. So again, very happy to inform you that the 58 crores which we are putting for the brownfield expansion of structural steel fabrication in Mambatu. So the work for the expansion has already commenced in the last 15 days, and we are very hopeful to start the commercial production from this brownfield expansion in the fourth quarter of this financial year. And also very happy to inform you that the greenfield expansion which we are doing for setting up a insulated sandwich panel line in Gilor, Rajasthan. So the work there has also started. We have already started the construction of the building there and are in the process of ordering the equipments. And the target is to start the commercial production in that plant as well from second quarter of next financial year. So the momentum in our industry continues to be positive, and we continue to beat the industry growth. We will continue to focus on the execution, and I believe with the kind of delivery which we are doing, very, like in the next couple of quarters, or maybe 3-4 quarters, we are further going to consolidate our position as a leader in the prefab industry. So that is a very brief synopsis of what all has happened in the last 6 months and some visibility on what we can do in the next 6 months. So I'm open to the questions from the journalists.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Mr. Balasubramanian from Arihant Capital. Please go ahead.
Good evening, sir. Congratulations for a good set of numbers. Sir, I think we have grown nearly 46% CAGR over FY22 to 25 in that prefab business. It's highly outperformed compared to the industries. This growth is majorly because of price aggression or superior technologies or better executions. And if you could throw some light on our current implied market share and what kind of target we are having over next 3 to 5 years. That's my first question.
Yeah, thank you so much. And thank you for the best wishes. As you rightly said, this growth of 46% over the last 4 years. This revenue growth of CAGR of 46% over the last 4 years can be attributed to various factors. So first and foremost is the team which we have created. So we have created a very strong team in design, operations and execution. In our business, execution at the site level, which we call as a project management skills, are very, very important. So I think what has differentiated us vis-a-vis our peer group is our focus on execution. I think our project execution team is one of the largest team, and we have focused on deliveries and execution. We have disrupted the entire prefab industry by the speed of construction and by the speed of delivery. So that has led to the trust of the customers on us, because one of the major problems in our industry was, while a lot of companies could design and manufacture, but they were struggling with execution at the site level. So we have solved this problem, and that has benefited the customers, and that is why they are giving us repeat orders.
Okay, sir. Sir, our asset turnover for existing facilities nearly 4.5 times or above that. I think we are doing 160 crore capex in Kilot and Mambattu. And what kind of asset turnover we can expect in those upcoming capacities?
Yes, so our asset turn right now is around 4.5 to 4.7, and in our business, in the structural steel segment, we can do about 6.5 to 7 times of asset turn. So this 58 crores which is going into the brownfield, there we can expect a revenue of 300 plus crores coming in from that expansion. And the second expansion is towards the greenfield project of setting up of insulated sandwich panels. So there the capex is about 102 crores, and in insulated sandwich panels we can do asset turn of 2.5. So maximum 250 crores kind of revenue can come from there as well. But
yes, sir, please continue.
Yeah, but as we speak, the existing capacities are good enough for us to meet the requirement of this financial year.
Okay, sir. Sir, right now our capacity, I think we are running at nearly 90% kind of utilizations. And our revenue will, I think this Mambattu will start from Q4FY26, and Kilot, this will start from next year Q2. And so what is the comparative ROIC and payback period for this greenfield and brownfield expansion?
See, typically our ROC and ROE has been Typically, our ROE and ROC is around 23 to 25%. It has always been there. So going forward, also we'll maintain the similar kind of ROE and ROCE. And as far as sandwich panels are concerned, yes, when we sell the sandwich panels as a product, the payback is around 3.5 years, or 4.5 years typically. But at this moment, we are also planning to develop certain solutions around the sandwich panels, especially in the clean room and cold room segment. So that will expedite the ROE, that will actually improve the ROE and ROCE of this sandwich panel line investments.
Okay, sir. So my last question, we are expanding into markets like Bhutan, Oman, and Bangladesh. And I just want to understand what's the competitive landscape in these regions, and what kind of specific value propositions we have compared to our competitors, and what percentage of revenue we are targeting from on the international side. Maybe in next 3 to 5 years time frame.
I think your question had various parts, so I will try to answer whatever I remember. So first of all, you talked about international. So at this moment, our export sales are minuscule. They are in the range of 1.5% to 2% of the revenue. But with this Mambattu facility in Andhra Pradesh, there is definitely a geographical advantage because the port is only 50 kilometers away from us. So we are evaluating the possibility of exports to Middle East and Africa at this time, but nothing concrete to talk about. And then you spoke about, I think, the next 3 to 5 years of visibility. So, the good part about prefab business is that at this time, prefab is only about 3 to 5% of the overall construction market, building construction market. So it means that, there's a tremendous potential. There's a tremendous potential for growth in this prefab segment, and we have only touched the tip of the iceberg. So with that, although we are in a capex cycle right now, although there are a lot of new factories coming up, but we believe that, even if this capex cycle slows down a little bit, maybe, in future, still there will be enough headroom for us to grow because of the technological replacement from the conventional construction to the prefab construction. So we feel that, while the industry will grow at 10 to 12% as per the CRISIL report, but as has been our track record, we have always beaten the industry growth and will continue to do that as well in the future.
Thank you, sir. Thank you so much for the detailed explanation. All the best.
Thank you. Our next question is from the line of Abhishek from AB Capital. Please go ahead.
Hello, am I audible?
Yes.
Yes, sir, you're audible.
First of all, sir, congratulations on great set of numbers. I just wanted to know this quarter our results were exceptional. So just wanted to know how much revenue growth run rate are we targeting going forward over the next 1-2 years?
For us, this first half is typically about 45% to 47% of the revenue. So, and the second half will definitely be better than the first half. That is all I can say to you right now. And as far as, next 1 or 2 years is concerned, we are putting up new facilities. We are expanding our existing facilities and also debottlenecking some of the processes. So with all these initiatives, we are very confident to continue growing and, beating the industry growth.
Okay. And just wanted to understand, from a customer's point of view, how beneficial is pre-engineered buildings in comparison to traditional constructed buildings?
Yeah, so that's a great question, first of all. See, there are 3 problems which a pre-engineered building or a prefab construction solves vis-a-vis the regular RCC construction. So the first one is related to the cost. In terms of cost, pre-engineered buildings are about 15 to 20% cheaper than a conventional RCC construction. Secondly is the time. So the time taken for a prefab is just half of the RCC construction. And third is the flexibility in terms of modifications. So, while RCC are rigid structures, so the dismantling or, further addition becomes very difficult. But in case of prefab, that is very easy and can be done over a few days or few weeks. So all this makes the prefab construction, the new age construction, and, a much faster construction where the investment or the ROI can be recovered at a much faster pace.
Okay. And is there any scope for margin expansion going forward?
Yeah, for the margin expansion, we'll continue to maintain at 10.5 to 11.5. Reason being that our strategy in the last 3 years and for the next 2 years as well is going to be market penetration strategy. Our market share is around 5.5% right now, which we want to take it to say 10% kind of a level minimum. So unless until we do that, we'll continue to focus on the on deepening our market penetration. We already are present across all the 4 regions in the country, across all the states in the country. So now the strategy is to focus on the little bigger size project, big ticket size projects, and make our qualifications for the large size projects as well. So with this strategy, we are working right now.
Okay, 10.5 is EBITDA margin, you're saying?
EBITDA margin, yes, 10.5 to 11.5.
Okay. And my last question is, how much of the total revenue it is government revenue and private revenue, government order and private order?
Yeah, again, a great question there. But for us, most of the revenue, I would say about 95 to 98% of the revenue is coming from the private sector. For the government, we do only very little business directly. Although in the past, we have done 5 airports under the regional connectivity scheme. But right now, we are just focusing on the private sector business. And government, business is coming to us, but it is coming indirectly through maybe some EPC contractors like, say, L&T or SCC. But that is very small for us right now.
And how many days it takes payment to come generally? Like, is there any delay payment or any problem such?
Since we are dealing mostly with the private sector, so payment delays, are not substantial for us. In our business, typically what we do is we protect ourselves in payments. We take payments at various stages. So typically for us in the private sector, we would ask for at least 10 to 20% of advance, and then about 10% on GA drawing approval, and then about 60 to 65% on or before supplies, and only 5 to 10% is left for execution and final handing over. So in any project, like the cash flows are very well protected, and in worst of the situation, we for any given project, the maximum exposure we'll have is 5 to 10% of the project value.
Okay. Thank you, sir. Thank you.
Thank you. Our next question is from the line of Shivam Dave from MV Investments. Please go ahead.
Yes, hi. Am I audible?
Yes.
Yeah. First of all, congrats on the very strong set this quarter. I just wanted to understand, given that your plant utilization is at 88%, how do we expect growth to pan out for the next 2 quarters? I understand that you have new capex coming up in H1 of next year, but how would your growth be for Q3 and Q4?
Yeah, for the Q3, we are debottlenecking our certain processes, as I said earlier. So that has been a process which has been done in the last 2 quarters, and due to that, we have been able to utilize our capacities by 88%, and further, some debottlenecking activities already going on. So that will be one of the areas through which, the third quarter revenue will either be a similar kind of revenue, a little more than this. And for the fourth quarter, as I said, this Mambatu expansion, brownfield expansion will be coming in. So that would add another 28,000 to 32,000 tons of capacity for us.
Capacity. Okay.
And
so that should
this,
take you to 1.6 lakh.
Yeah, and besides this, the sandwich panel capacity which we have put up 4 months back. So now, we have started to get regular orders there. So that is again one capacity which will give, revenue close to maybe 100 crores for us in the next 5 to 6 months.
Hello.
Shivam sir, does that answer your question?
I think the management was not audible.
No, the management team is on the call.
Okay, I'll just go through the recording. And just one more question. I think in your PPT you have showed a 150-hour project that you had executed in Andhra Pradesh. So how does this work? In the sense that is this your average time that you take for every order, or was this like a one-off order? And is your employee count higher in orders where your project site the time taken to complete is like, let's say, 150 hours?
Yes, this was one of. Sorry, Nikhil, you want to take this?
Maybe you can take it. It's okay.
Yeah, so this was one of, project for us. The idea was to demonstrate the capability of a pre-engineered building and also that of EPack. So this was 1.5 lakh square feet building done in 6.5 days. And you are correct that, number of headcount is little more. So it is around 20 to 25% more than the average headcount which we have in any given site of the same size. And post that also, although the speed has not been the same at other sites, but yes, there has been at least 4 to 5 projects where we have, created again kind of records at least in India by the speed which we have demonstrated in execution of the buildings. Those buildings were, of a much larger size as compared to this one. So, we, as I said earlier, we have been, we have disrupted the entire PB industry with the sheer execution speed, and that is our strength. and USD.
Right. Great, sir. That's it. That was my last question. Thank you and all the best.
Thank you. Our next question is from the line of Mayur Patel from 361 Asset Management Company. Please go ahead.
Hi, congratulations for excellent set of numbers. So just one question on the pipeline, if you can give some color, because the order book is pretty healthy, there's no doubt about it, and the execution is also very robust. If you can just help us, how are you seeing the pipeline of new orders? And some color on you have one interesting slide talking about sunrise sectors like data centers, the logistics, and things like that. So are you already seeing some inquiries happening in data centers and these other sectors?
Yeah, Nikhil will take up this question. So Nikhil, please go ahead.
Yes. Thank you, Mayurji, for this, for the congratulations to us. And I'll answer it in two parts. So one is the current pipeline that we have. It's a very robust pipeline that we have currently. Like Sanjayji mentioned earlier, the new age industries like renewable sector or the data centers, that is adding a lot of value to our pipeline, because the benefit of these projects are that these has pre-engineered building as well as sandwich panels, both as a part of the complete solution package. So there we are getting an upper edge, since we have both the products in-house manufacturing. We are one of the only players in the country who has the scale of pre-engineered building as well as the sandwich panel under one roof. Apart from that, we are also seeing a lot of inquiries from various sectors for site infrastructure from bigger giants in the country who are coming up with huge expansions, being the capex cycle on the high side. So the pipeline is very, very robust, and as Sanjayji mentioned, the order booking in H2 is much better than the H1. So looking at the pipeline and looking at the current flow that we have, I think the tailwinds are very strong, and we'll see a much better order booking in the coming H2. So that is one part regarding the order booking flow. And second is regarding the new age industry. Like pre-engineered building is widely accepted in the West. If you see, multi-story buildings and, residential buildings, commercial buildings, institutional buildings in the West, in America, US. India still, industrial and warehousing has more or less shifted to pre-engineered building. But there is a huge scope in multi-story buildings and new age, products and, projects that are coming in. So I think we'll see a huge upside of conversion from RCC buildings to pre-engineered building in the coming years, and that will add a lot of, overall market share to pre-engineered building compared to overall construction in the RCC.
Got it. And from data centers, are you seeing some traction already happening?
Yes. So, we are already happy to say that we are already working on a couple of data center projects wherein we are doing, sandwich panel installation. So, the data centers, currently we have not executed a pre-engineered building structure for data centers. We have a pipeline wherein we are discussing, and that is on the verge of, commercial and technical closure. But apart from that, we are already executing a couple of projects where we are doing sandwich panel supply and installation. So those are special type of panels which are, fire rated and insulated as well. So that application has already been started, and now we are all in discussion for the steel structure fabrication and supply as well. So overall, data centers is looking a promising market for us in the future.
Perfect. Thank you, Nikhilji, and all the best.
Thank you so much, Mayurji. Thank you.
Thank you. Our next question is from the line of Shubhanu Bangal from 3 Head Capital. Please go ahead.
Hello, I'm Amadil. Hello.
Yes.
Yeah.
First of all, I am very new in this industry. According to my understanding, this margin torque, this fully depends on steel price. How to mitigate the steel price fluctuation and maintain this margin?
Okay.
Yes.
So what I understand from you is how are we protecting ourselves from the steel price increase, commodity price increase. That's the question?
Yeah.
Okay. So you see, you are right that our business, 85% of the raw material cost is the steel, and also the fact that most of our contracts are fixed price contract. But at the same time, it is important to note here that our order book is for, our orders are for 6 to 8 months period. And in this 6 to 8 months, typically, the initial 3 months are the period for designing, procurement and manufacturing, and the balance 3 months are for execution at the site level. So it means our exposure is limited to the first 3 months of getting the order. So the way we protect ourselves here is, first of all, we have an inventory of raw material of close to 35 to 40 days in our system. So that gives us a protection of 1.5 months. Secondly, when we issue a purchase order to our steel vendors, to our steel suppliers, then typically the purchase order is for delivery for the next 8 to 10 weeks. So that gives us the protection for another 1.5 months or 2 months. And thirdly, there is a process of natural hedging that happens in our business because we book orders almost every week. So if the steel prices increase in a particular week, then the new orders are always at a new price. So these are the 3 ways through which, our prices, our commodity prices are protected, and I don't think it has much impact on our gross margins.
जिस दिन आप ऑर्डर लेते हो उस दिन ही आप स्टील बाय कर लेते हो, am I right? जिस दिन आप ऑर्डर लेते हैं,
जब हम ऑर्डर लेते हैं तो we have not that particular day but that particular week. So whatever order booking is done in a particular week, the subsequent week will do the purchase for that particular order.
Okay. Understood. My second question is, can you sustain this 40% CAGR next 2 years?
It's a very difficult and tricky question for us to say, but so the comfort in our business comes from the order book. So the order book which we have right now is 920 crores, which gives us the visibility for the next 7 months at least. And with the strong pipeline of inquiries as well as the kind of commitments which we have got from the market already, so I'm very much sure that we can continue this momentum of robust growth and beating the industry at least for the next 18 to 24 months.
Okay. You are very conservative. Okay. Thank you.
Thank you. Our next question is from the line of Umang Parekh from Ashika India Select Fund. Please go ahead.
Yeah, thank you for the opportunity and congratulations on a great set of numbers. So my only question is, the cash flow has turned positive as compared to last year. So what are the factors which have led to the improvement, and how do you see the cash flows going forward?
Rahulji, can you answer this, please?
Yeah, thank you so much, Umang, for the congratulations. Look, last year was a one-off year. Generally, the ideology of the company has always been to generate cash, and that is what our MD told in the beginning, the way we receive our cash at various stages. This year has been really well for us in terms of, managing our working capital as well. And that has been the primary reason why we were able to generate cash flow from operation positive. And the idea from a management side will always be to maintain a healthy cash flow from operation going forward as well.
Sure. Thanks. That was my only question.
Thank you. Our next question is from the line of Nikhil Purohit from Fident Asset Management. Please go ahead.
Hi, am I audible?
Yes.
Yeah, thanks for the opportunity, sir, and congrats on a great set of numbers. Sir, firstly, I realize you've given the guidance of 30-35%, but what volume growth do we see coming in FY26, FY27 in the 3 divisions? So the PEB, the EPS packaging, and the sandwich panel division.
Yeah. So in terms of volume growth, the capacity for the structural steel fabrication for us right now is around 133,000 tons. which is increasing to 170,000 tons post the utilization of the IPO proceeds for the structural steel. At this time, in this financial year, we assume that we'll be able to utilize at least 80% of the capacity overall on an annualized basis for the structural steel fabrication. For the sandwich panel, we have two facilities. The earlier facility which we have in Greater Noida, that is already utilized by 80-85% and almost running at full capacity. So that will continue to run at full capacity. The new sandwich panel line which we installed in our Mambatu, Andhra Pradesh plant, that is fairly new, and that market is also new for us in terms of sandwich panels, and that is picking up slowly at this time. But again, as Nikhil said, we are in discussion with a few large corporates to set up modular housing for them for their upcoming projects. And once we get this project, so I understand that we'll be able to utilize that capacity on an annualized basis by about 50-55%. And thirdly, on the packaging side, the first half of the year has not been good because, of the unseasonal rains all across north and south of India, and that has affected the consumer durable. For us in the packaging, most of the customers are consumer durable customers, although we rely on LG Electronics, and LG Electronics is around 50-60% of the revenue of that particular division. So it depends on how the consumer durable market stays over the next 2 quarters. If the consumer durable market comes up strong, then I think we'll be able to make up for this loss of revenue of around 20% there in the next 6 months. But as a company, as a management, we have decided to focus on the prefab business for now because there are strong tailwinds, and we have been able to place our company, very differently in this business.
Got it. And on that note, so sandwich panel, that division is not reported separately. It is included in which division?
That is reported in the prefab division. Reason being, sandwich panels are a separate set of products, but a lot of projects are there in which, it goes as a package. So there will be some structural steel, there will be sandwich panels, doors and windows and things like that. So because of that, it is not possible for us to report it separately.
Okay. And the 133,000 that is reported as PEB, this does not include the 8,400 metric ton per annum, right? For the sandwich.
For the packaging. For the packaging, yeah.
That is not included.
No, that is not included.
Okay. And just last question. So our net working capital stands at around 40 days, if I'm not wrong. Going forward, where do we see this going, considering higher inventories for meeting the demand? And I mean, on the same lines, we are repaying 70 crores of debt as well. So our short-term borrowings will also naturally rise to cater to the demand. Accordingly, where do we see our interest expense going as well, going forward?
See, I think there is some correction. This working capital last year was around 24 days net working capital. And for the first half of this year, as Rahul said, we have focused a lot on payment collections, and there has been some, leeway we have got in terms of account payable. So our net working capital is 21 days, not 40 days.
Okay.
Also, we have given a guidance to the market of around 35 days.
Got it.
So we are comfortable with a working capital of around 35 days, but this time it has been exceptionally good.
Understood. And what about the interest expense?
So for the interest expense, Rahulji, can you explain what will be the impact going forward?
Yeah. So look, what we have done is we have repaid 70 crore term loan, which was about 122 crore at the beginning of the month. So we have paid that. So we are remaining with about 50 odd crore of term loan. And WCDL at the moment, as I speak, is in the range of 60 crore. But depending on, business scenario, it can go up and down according to situation. So, however, let me also tell you that the interest cost that we have is one of the best in the industry. So, it should be in the range of about, 1.5% going forward as well, the finance cost, 1 to 1.5%. However, there is a substantial income that we are also generating from the FD that we have currently in hand. In H1, we generated about 0.73% out of the total interest. Going forward, for the next half, it will be a little better. So that should square off. The interest cost should almost square off the interest income in the next H2.
Understood. And you've mentioned 58 crores capex and 102 crores in the greenfield facility. What will be our capex for the full year? And do we have do we hold any more land apart from this on our books?
Nothing at the moment. So apart from the land that is mentioned in the prospectus, we do not hold any other land. And the capex that we said earlier as well, the idea is to first start Mambatu end of Q4, and then we'll definitely have some capex CWIP for the Galoth unit as well, because the work has started there, but it will ideally start operating at the end of Q2 FY27.
Got it. Okay. Thank you so much.
Thank you. Our next question is from the line of Param Vora from Trinetra Asset Managers. Please go ahead.
Hello. Thank you for the opportunity and congratulations on the great set of numbers. So what I wanted to ask was, geographically, where do you see the highest growth? Is it South India, is it the West or the exports?
Yes, for us, the maximum growth is coming right now from south of India, because I feel most of the bigger industries are being set up either in the states of Tamil Nadu, Karnataka or Andhra Pradesh compared to the north of India. And since, our capacity is the highest, our largest capacity is in south of India, so we are able to take advantage of that. And looking at this, strong order booking from the south, we have decided to do our brownfield expansion also in the south.
Okay, and the next question is that is there any, packaging business complementing or interacts with the building business?
Yes, there is. The styrofoam, we basically do styrofoam packaging. So the technical name of styrofoam is EPS, expandable polystyrene. So we started as a manufacturer of expandable polystyrene sandwich panels, because the styrofoam which we produce, so the same styrofoam blocks we cut into sheets and we use it for the sandwich panels. So that is how we got into the building business. And still now, we continue to do our modular housing using this styrofoam sandwich panels. So that is the linkage between the two businesses.
Okay. Thank you.
Thank you. Our next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes.
So, out of the current order book of around 900 crores, what's the execution timeline for this?
So, as I said earlier, for us, the order book to revenue cycle is around 1.5. So, for us, it may be 7 to 8 months of revenue.
And, sir, what is our current utilization of the PEB capacity, and with respect to the greenfield and the brownfield expansion, how much capacity will be added in this year and how much of the remaining capacity will be added next year?
So I think I've covered this, but for your sake again, I will tell that at this moment in the second quarter we could utilize about 88% of the built-up section capacity. So built-up section is something which defines the overall capacity. Although besides built-up sections, we have certain cold form sections which are kind of tag along. So they depend from project to project. There are certain projects in which the tag along capacity of cold form sections is less. So it depends from quarter to quarter and building to building. But for second quarter of this FY, we could utilize 88% of our overall built-up section capacities. In terms of overall capacity, including the cold form and the roofing and everything else, I think it was around 74 to 78%. And, when you talk of expansion, then this 32,000 rather no, 37,000 tons of structural steel fabrication capacity, which we are putting up as a brownfield expansion coming up in our Mumbai to Andhra Pradesh plant. So this should start commercial production from the fourth quarter onwards.
Okay. And what about the greenfield? It will be starting in this year, or will it start next year?
Next FY, starting from the second quarter of next FY.
Okay, sir. And so my final question is with respect to the EPC packaging business. This business has been stagnated. If I look at the past 3 years, it has been around 180, 170 crores business, and it hasn't grown. Whereas, so can you give any, going forward, can you give any guidance with respect to the growth? That's the first part of this question. And second part of the question, although the EPS packaging business didn't grow, there has been significant margin expansion of this business. It was in FY23, it was around 6.5% margin, and now in the recent FY25 financial year, it was around 11.5%. So is this margin maintainable, or is it a commodity product which and the margins will fluctuate due to the cycle?
Yes, you are correct that the EPS packaging business has not grown substantially in the last 3 years. And going forward also, we believe that it will continue to grow at 6 to 7% because, as I said, this packaging business, about 50% of the revenue is coming from one single customer, that is LG Electronics. So organically, with the growth of LG in Greater Noida, it will grow. And when you talk of the margin expansion in 23 versus this growth in 25, so it has been attributed to the change in the fuel technology. So in the year 2004, 2024-25, we invested in a turbine. So that is a multi-fuel turbine in which now we are running a biofuel. So because of that, we were able to reduce our power and fuel cost in that particular business, and because of which there is a margin expansion. And this margin expansion is sustainable and it will continue to remain in that category, remain in that range.
Thank you, sir.
Thank you. Our next question is from the line of Devang Patel from Samiksha Capital. Please go ahead.
Hi, sir. Congratulations on good set of numbers. If I look at the Q1 revenue growth, YOY, and the Q2 revenue growth, there's a stark difference. Is that due to rains impacting execution, or is that just a function of order book and execution that picked up in Q2?
Yeah, you are correct that, the quarter one was little subdued for us. I think the major reason there was that what happens is typically at the start of the quarter, most of the companies, they are in the process of, finalizing the contract, or the focus is more towards getting the civil works done before the rainfall. And the idea is that, they want to postpone the pre-engineered building supplies to second quarter, so that, the pre-engineered building doesn't get hindered much to great extent by the monsoons. So that is one reason where, although we try to push the customers to take the delivery, but they focus a lot on civil works execution. And I think that helped us rather in the second quarter, because a lot of our projects, they were not affected by the monsoon because the civil works was already completed, and we could just supply and do the erection without any effect of the monsoons.
Okay. Sir, and on the orders in the presentation, you mentioned 3 large orders. If you can highlight what are the sizes of these large prestigious orders that you mentioned, and if you got a semiconductor order also, what is the size of that order?
Yeah, in the investor presentation, we have given you 3 names. So those are just sample names, but doesn't mean that those 3 are the only orders. Typically for us, average order size is around 6 crores, and but these 3 are the large orders which we have received in this first half of the year. Mainly they have come from Premier Energies for their upcoming solar cell manufacturing plant in Naidupeta, Andhra Pradesh. The second one is from Raison Solar, again for a solar module manufacturing plant in Gujarat. And similarly, from other players as well. from the manufacturing side. And also for the warehousing, we have received orders from this Horizon Industrial Park, NDR, which is a NDR Invite group company, and Raja Puspa, again NDR group company. So similarly, we have been getting repeat orders from a lot of our clients and as well as the new customers.
Okay. And typically, if we are booking large industrial orders, is that margin accretive or margin dilutive for us?
It depends, because, it depends on the strategy of the company at that particular point of time. Normally, larger orders are margin accretive because we believe that on an overall basis, we are able to save on the operational expenses and the design expenses and the project management expenses in a large project. So accordingly, we do our pricing strategies for the larger projects. But yes, going forward, you will hear, a lot of big ticket size projects coming to us. Earlier, we didn't have the required qualifications, but now we have proven our capabilities time and again, and we have started to get some big inquiries, which will result into good size orders for us.
Okay. So on the margin side, the gross margins have been somewhat similar to last year. The H1 margins are better than what we've done last year. Maybe it's operating leverage mostly. Do we expect more such benefit to continue going forward?
Definitely, yes. The endeavor of the management is always to, work on the growth. And if we are able to continue the momentum, then I'm quite hopeful that we'll continue to operate at this EBITDA margin of 10.5 to 11.5%.
You mentioned, expensing out the share issue expenses. Is that something which will impact in Q3?
Rahulji, can you take up this question?
Sorry, Devang, can you repeat that question?
We are looking to expense out the IPO expenses. That is yet to come.
Share issue. Yeah, so share issue expenses are pretty much adjusted through security premium and are not routed through the P&L. So we have made adequate provision as on 30th September for our IPO expenses in the company's book, and some of which have been paid already, some of which has been paid in October, and some of which will get paid over November, December as well. So it does not impact the P&L is a point that I try to make. It will be adjusted to the security premium.
Okay. You mentioned earlier we got some leeway on payables. I want to ask that, is that something that we took ahead of the IPO funds coming in or requested from our suppliers, or is that what the suppliers are willingly giving across the industry?
See, ours, we typically engage enter into contracts with our suppliers who are mostly, steel suppliers. So it depends from time to time. Since I think our volumes are quite considerable now in the industry, so they are prepared to offer us better payment terms, and we have been beneficiaries of that. But it is not like, this not working capital of 21 days is entirely dependent on account payables. Although there has been an increase of 5-7 days in the account payables, but that is not the only story. Huh?
Yes. Somewhere this will...
yeah. Sorry, Devang, I just wanted to add here. Look, the AR days and the inventory days for us has been great as well in the H1. If you look at those numbers, in spite of a decent growth on the revenue side, the AR has not grown significantly at that scale. So we have been able to manage our AR as well for H1 and the inventory as well, in spite of the massive growth.
Okay. So when you are guiding for a little higher working capital cycle at 35 days, it's mostly the trade payables that will, reverse from current levels.
Yes, Devang.
Okay. That's all from my side. Thank you.
Thank you. Next question is from the line of Payal Shah from Billion Securities. Please go ahead. Ms. Shah, your line is unmuted from our end. Please proceed with the question. As there is no response from the line of the participant, we'll move on to the next question. The next question is from the line of Mr. Vaibhav Gupta from Avya Advisors. Please go ahead.
Yeah. So first of all, congratulations on the strong performance this quarter. So you have mentioned that one of the reasons for this growth is that you have outperformed the industry average, right? So I just wanted to understand, do you believe you will be able to sustain this outperformance going forward as well? In the other words, can we expect you to continue growing faster than the broader industry?
Definitely yes. Definitely yes, because the kind of focus and we have on the execution, especially on the project execution side. So we have become a preference for most of our customers. They want to do business with us, and that is one of the reasons of our robust growth and repeat orders from our customers.
Okay.
We have disrupted this entire industry because of our execution speed. So most of the new age industries, like Nikhil was talking of solar. So when the technology of machine is, getting redundant in the next 3 years, so they want the buildings to be ready in 3 to 6 months. And in fact, EPack is the only company which has been able to satisfy this requirement. And that is the reason we have become the preferred player, at least in this industry and a lot of other industries. Similarly, if you talk of warehousing, for them, if they can prepone the construction of the warehouse by, say, 2 months or 3 months, so they can prepone the revenue and the ROI improves substantially. So these are the reasons why, we are preferred over the existing larger part vendors or the smaller ones.
Okay. And second question is, could you share some light on your outlook on how the overall PEB industry is performed in this first half year, and how do you...
Sorry, we are unable to hear you clearly. Yeah, sorry, we are unable to hear you clearly, the second part.
Am I audible right now?
Yes, it is better.
Yeah. So could you share some light on how the overall PEB industry has performed in the first half of this year, and how do you see it evolving over the next couple of years in terms of the demand drivers, sectoral trends, and overall growth potential? Like the overall PEB growth for this half year, how was the growth in this industry?
See, this first half of the year was a little challenging in terms that in the first quarter there was this India-Pakistan situation, and then in second quarter this a US tariff created little nervousness in the capital investment decisions. But still, I would say the industry has done around 10 to 12% of growth in the first 6 months, and most of the growth is coming right now from renewables and from auto and FMCG. A company like Reliance Consumer Products, which is Campa-Cola, they are setting up, bottling plants across the country. Similarly, a lot of other companies are doing it as well. So those are the opportunities which we have in this industry. And going forward also, I think the momentum will continue in favor of us. There are inquiries coming in from EV. So a lot of EV manufacturing plants coming up, a lot of this battery plants coming up, this battery energy storage plants coming up in the country. And now even this renewable sector, they are going backward into the glass, into the wafer. So these all are the opportunities, for us. And also one of the opportunities for our sector is the data center. Already few data centers in this country has been done using this pre-engineered building technology, and it has been a great success. So going forward, data center is something which the industry is eyeing in a big way, and everyone including us is developing the capability related to design and manufacturing and execution in this space.
Okay, so data center can be a better place, right?
Yeah. Yes.
And the last question is in terms of the export, as you in your PPT, it is mentioned that you wanted to become a key player in the global PEB industry. So how do you see the export business in the PEB?
Yeah, export is something, which we have studied. We have, dig down into the details of the export numbers from this country. And what we have found out is most of the export market is either in the Middle East or in Africa. While, our peer group has been talking about the possibility of exports to the United States. But yes, we don't see that coming immediately. We don't see that coming immediately. Yes, in the long term, there is a possibility. So we have started to work on getting export inquiries from Middle East and Africa, but nothing considerable is coming up for us. Export constitute around 1.5%, 2% of the revenue, and that too is coming from most of the SAARC nations like Bhutan, Sri Lanka, Bangladesh, and Nepal.
Okay. Okay, sir. That's all from my side, and best of luck for the future.
Thank you so much.
Thank you. Our next question is from the line of Akshay Shah from Toro Wealth Managers LLP. Please go ahead.
RTS, congratulations, sir, for listing and for good set of numbers. Sir, I have three questions. Sir, what is the time taken for order conversion once the quote is received? And sir, for order book pipeline, is there trend that 45% of order book will be received in H1 and 55% is in H2? And what is the YOY growth for half year in order book?
Yeah, so you have three set of questions. First is whether the order book is 45 and 55 in terms of order book also. It's very difficult to say, whether it will be 45, 55 or not, because it depends on on the customer a lot, depending on his urgency to do a capex. But yes, typically what we have seen in the last 3 years is the quarter 3 and quarter 4 are very, very heavy. Quarter 3 being that, people want to place the order for the building and start the civil works. And quarter 4 because, they want to utilize the money proceeds and, start planning for the next year. So yes, quarter 3 and quarter 4 are heavier quarters when it comes to order booking for us. And the second part of the question, can you please repeat?
Yeah, sir, what is the time taken for order conversion once we initiate the quote with the customers?
Yeah, so it is around, I would say, 6 to 8 weeks maximum.
6 to 8 weeks. Okay.
Yeah.
And sir, our execution is the fastest in the industry, and we have done commendable work there. But why can't others do the same? It's a risk in our business.
Yes, see, there is no process in this universe now, which cannot be copied or replicated by any other company, be it technology, manufacturing process, or for that matter, execution. So there is a possibility that, competitors will sooner than later try to catch up. But, what we have differentiated, how different is, the speed is in our DNA. So, it has taken us quite some time to be able to create this kind of culture in the company, wherein it is not only in the execution, but it is in the entire decision making as well. So right from getting the order to its designing, to its manufacturing, and then final execution, I think our turnaround time is the lowest in the industry. And we can attribute this to the lot of hard work which we put in getting the automation and the digitalization of the entire processes. Because in this business, we do just designing, and that is also customized for each of the buildings. So designing, manufacturing, execution, and final handing over. So that requires a lot of nitty-gritty and micro level detailing, which is only possible through exceptionally strong and clear processes and digitalization. So we have spent a lot of time, myself and Nikhil, we spent around 2 years just defining each of the processes in detail. So if any company can do it, they will be able to be successful in this industry.
Okay. Thank you so much, sir. And once again, the congratulations, sir. Thank you.
Thank you so much.
Thank you. Our next question is from the line of Yash Parekh, who is an investor. Please go ahead.
Congratulations on the great set of numbers, sir. So my first question is, what fueled the 1% growth margin? I know you have already answered that the range will be 10.5 to 11.5. But my question is, what fueled the 1% and is it sustainable?
this 1%, if you see, it has come from reduction in the employee cost. If you took a look at quarter 2 and quarter 1, so while it was around 11.2 something in quarter 1, it is 9 point something, 9.8. So it is because of the
11.45.
we are benefiting.
Yeah.
Yeah. So yeah, it is economies of scale that is benefiting us.
And so you already talked about the export market, that it's currently 1.5%, and inquiries are there from other countries as well. But you are currently focusing on the domestic market. But still, my question would be that are the margins different from the domestic in the export market?
Would be very difficult for us to say, whether they are different or not, because for us it is only very, very small quantities. So I would not like to comment on, how the margins would be for the US market, because we are not operating in that market.
So are in the current near future, say next 2 to 3 quarters, the percentage of the export will remain same, right? Or are you kind of trying very hard to get into the export market also, aggressively? Are you trying that, or you currently focusing on domestic only?
For us, the focus is on domestic, but we are building team as we speak. We are building team for exports, but what we feel is, if we do the same effort in the domestic market, then we will be much more successful in getting the orders.
Okay. Thank you. Thank you very much, sir.
Thank you. Our next question is from the line of Santosh Kumar Singh, who is an investor. Please go ahead.
Hello. Good afternoon. Am I audible?
Yes.
Okay. So my question is basically, what is the size of the pipeline and what is our hit ratio? Conversion of that pipeline. That is the question number 1. Yeah, you can answer that, and then I can ask another question.
Yeah, Nikhilji will answer it.
Yeah. So, as we mentioned earlier, that H2 is generally a better, order booking segment for us, H2. So, we are seeing a lot of huge inquiries with us, similarly in the solar business, as well as, from the FMCG, from warehousing sector. We are also seeing huge inquiries that we have in the pipeline, which is almost converted. Some of them are also, confirmed, but we are yet to receive the written purchase orders from big giants for modular porta cabins and modular site offices and accommodation buildings, which uses steel structure as well as sandwich panels. So, typically if we see our conversion ratio would be around 15% of the number of inquiries that we handle. Now, depending on the size of inquiries, the bigger inquiries, our percentage of hit ratio is much better, because we are focusing on getting bigger orders, so that our overall growth is fueled by bigger orders. So conversion ratio in bigger orders is much better, and smaller orders is around 10 to 15%. Looking at the pipelines, I can say the projection that we are having for the next year targets at the closure of order book that we want to close at is looking very, very positive, and I don't see any challenge, in terms of any reduction in growth due to lack of orders, because that is not has been our challenge as of now, and that will not be a challenge in the future as well.
Okay. My second question is around capacity utilization. I think we are doing some debottlenecking, you mentioned. So do we see any near-term, capacity constraint, or could you put more color on that, like how much we are going to free from this debottlenecking and all?
See, this is a regular manufacturing exercise where we do a lot of, TDR activities, tear down and re-engineering activities, and it gives us efficiency to the level of 5 to 10% improvement. So that will happen in this quarter as well. But more or less it depends on the capacity utilization. And also see, last quarter, what happens is the second quarter is the minimum number of holidays. So if you look at, July, August, and September, there are hardly any festivals which impact the production. So that way also, we have benefited from this quarter. But going forward, we are improving our capacities. We are improving our efficiencies. And I'm very much sure that, we'll continue to, gain momentum from this capacity utilization. At the same time, what we are doing is, although we foresee that there may be some production constraints, and so, what we are doing is we are creating a vendor base which can do some outsourcing job work for us for some time. So that is also in the process. We have been doing it in the past, but we have not done it in the last 3-4 quarters because we have already had some capacities. But there is always a possibility to get outsourcing back.
Okay. And my last question is around the export. Is it viable to serve our, global customer from India? How do you see that? Or you have any plan to put in the future?
See, as I told you, serving the market of Middle East and Africa is quite possible from India. There are few companies who have been doing it very, very well. Especially these companies are, located in Hyderabad and Mumbai. There are 2 companies which have been doing it very well. And as far as US market is concerned, I don't think that will make sense because PV by nature is supposed to be delivered very fast, and the logistics time itself is 6 to 7 weeks there in US. So I'm not sure how much viable that will be. That is not our market. And when it comes to expanding our horizons beyond India, yes, we are looking at markets like Middle East. We feel that the kind of growth which people talk about in Saudi Arabia and the GCC countries, this is quite exciting. We are studying the possibilities of getting into this market, and as some opportunities come up, we will definitely like to get into this market.
Okay. I think that's all from my side, and all the best for future results. Yeah.
Thank you so much.
Thank you. Our next question is from the line of Shravan, who is an investor. Please go ahead.
Hello. Good evening. Thank you for taking up the question. Congratulations on a good set of numbers and listing. So my first question is around the timeline that you have mentioned for building the prefab the structure, that is around 3 to 6 months, and it is much faster compared to the peers. So what is the average timelines that the peers are taking, and what is the advantage we have in terms of timeline? Is it 1 year or 2 years? I don't know. And then as part of the IPO proceeds, you have reduced the debt of around half of your short-term borrowings are reduced. Is there any impact on the bottom line? Can we expect some expansion in the bottom line? That's it.
Yes, the first half of the question I will address, and the second half, Rahul will take up. So I think you talked about the speed of execution for us and how much is the speed for the peer group. So while, I can talk about our speed, and sometimes what happens is, in a particular site, we'll be doing one building and our peer group, our competitor will be doing the other building. So there has been instances in the past 6 to 8 months, or I would say in the last 1.5 years, where we have completed the building of the same size in the same location at least 2 to 3 months before our peer group. So that has happened not once, but now it has happened at least 4 or 5 times. So that is what I can tell you. And for the second half of the question, Rahulji, can you please take it up?
Yeah. So look, you rightly mentioned that we repaid the loan and there will be margin expansion because of that. The loan that we repaid was to the tune of 70 crore at even an 8.25% kind of interest rate that we were offering on a yearly basis. That's about 6 crore. On a revenue cycle of, let's say, 1,500 crore, this translates to about 0.4%. So, yeah, that's the kind of expansion pre-EBITDA, pre-PBT level will happen, and post-tax, another 75% will get added. So that's about 0.3% expansion should happen on account of that.
Okay, thank you.
Thank you. As there are no further questions, I would like to now hand the conference over to the management for closing comments.
Yeah, thank you so much, gentlemen, for getting into the call and, giving us your best wishes. and asking some very valuable questions. So it was great interacting with you all. Thank you so much.
On behalf of Motilal Oswal, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.